let's get the monthly chart here. As this monthly chart is getting ready to resolve itself and push either to the 10,325 level or back down here into much lower levels, okay, for a more thorough, bear market retracement, like we had back here, it dropped 1,500 points from the 38% level. Well, here the 38% level is here, meaning a drop would be even more considerable. So knowing that we're due for more significant trending coming up as we go into the back end of this year, I wanted to go ahead and make sure people had some of my favorite trend trading tools in tow. But these are tools that were developed many, many years ago by me, not like a recent phenomenon. I mean, if you guys think about it, since the first day I've ever been here, Chris, and you've been with me for a long time, my speed lines have been on there, all along. Okay, well, they were there for a reason. It's just that I went ahead and didn't share all of that, wasn't the appropriate time or the place, and I've got a lot of other things that I'll be sharing over time as well. Okay, so nope. The ever-changing market conditions is basically the fact that you go ahead and do have to pull those different things out of your toolbox, okay, along the way. So, different conditions will call, obviously if I'm looking at a more choppy, volatile market versus a more trending market, I'm going to use different tools. You're not going to use a channel technique, a channel trading technique when you're in the middle of a trend. You're not going to go ahead and use a trend technique when you're in the middle of, a channel, and so on and so forth. So utilizing different tools and trying to expose people to the different tools. Chris, I have more. I have more, that's for sure. So, there'll be a lot to discuss as we go forward. Okay, so I don't know how long that. It looks like my screen was kind of paused there. I don't know how long the screen was paused, but hopefully you got to see what I was referring to there. What I was drawing, Chris, was like the multi-year chart here. As I was saying, you wouldn't use a channel technique in a trend, and you wouldn't use a trend technique, certainly not a long-term trend technique, in the middle of the channel. So I'm looking for more, of course this is a multi-year chart. I'm talking about, this is like a 5-minute chart, for instance, or a 15-minute chart. That's what I'm referring to. So with that being said, let's go ahead and, oh good, Chris, I just want to make sure. All right, what I want to do now is, as you can see here, what I've done is I've broken this down. I've got many, many examples. I got 5-minute charts, 15-minute charts, okay, and then 30-minute charts, 60-minute charts. So I got a lot of examples. Kind of wanted to walk through them. Before I did that, though, were there any other questions that people had before I get into all these different examples? So got a lot of people in the room, so I just wanted to see if there was any other questions before we get going here. How does, okay, Henrik, great. Okay, Mark, you're very welcome. And Mark and Henrik, both of you guys are going to be here, for the next several months, as I recall. So obviously, you don't have to go ahead and worry about getting all your questions out today. I'm just going ahead and just offering up if there was something pressing on your mind. Greg, as far as the 5-minute chart, of course, we're at my resistance. Well, not just the 5-minute, just in general, we're at my resistance level here, and we're smoothing out to the 0 line on the MACD. So The 5-minute has only had one test of the 20-period moving average, and so far that's been successful. I believe, if I recall, you've taken some long positions. So, and I don't know what you're doing with them, and I guess I won't ask. I'm not really giving individual advice there, but what I would go ahead and say to you is that for my long positions, I'd start being more leery if I came, start breaking down through this area here. But depending on the nature, if it's more of a swing trade or it's more of a trend trade, you do have a great deal of trending support all the way down to 24. See the hourly chart here is trending to the upside. The 30 minutes got the nice trend. The 15 minutes got the nice trend. So the 5-minute could be, even if it pulls back through to 27 or so, it could be a short-lived phenomenon. Okay, and like I mentioned in the opening pre-hours commentary today, with the this chart as I've shown it, you're long until you're wrong on today's trade. The speed line, as we see, did close, and it did open up here. It's now even above my channel, so that's at 94.65 is the short-term speed line. The lower speed line is at 9,400, and then of course the 20 is at 93.83. Huge amount of support back in here. So depending on the nature of your trade, short-term like intraday scalp versus holding for several hours versus holding for a couple of days, will dramatically affect. Okay, yeah, it's definitely not the setup at this point yet, for a couple of reasons, one of which is that MACD, certainly. I do like the fact that the 20 cross, but keep in mind, actually back here was better because we resumed the trend. Remember what we talked about on the earlier slides. The point is we're looking to resume the trend, the speed lines, to resume the trend in the direction of the 20-period moving average. Okay. Now, it did not have the volume requirements here, two higher highs on up bars and 1 bar pullback. But again, that's what I said. I'll be looking at this trade without that. Remember what we talked about fish hooks and crooked fingers will come into play here, Greg, a great deal more. Well, here's an example. Here you got the fish hook, and you got the MACD, and you got the resumption of the trend back to the upside on the speed lines, okay, in the direction of the 20-period moving average. So back here was actually far superior than what you see here, where what we have is the MACD is just going back to kind of like yesterday, crisscrossing back and forth over each other at a known resistance level, just like we did yesterday. Okay, that's what happened yesterday here. See it? Right here, crisscrossing over each other. And then, of course, this was the close, but crisscrossing over each other. Yeah. No kinking. We don't want that kinking. You want that that speed line to travel back in the direction of that 20-period moving average and get ideally more of a railroad tie. Oh, you're very welcome. So I do want to just close up that point, though, which we're going to discuss more anyways as on the rest of the presentation as I show the things. But I like more of the railroad ties. Okay, so a little bit of space. They're kind of running in parallel with each other. Can't really draw it on there. Let's go ahead and pull up the chat room here. So what we're looking for, we're not really looking for the speed lines crossing back and forth over each other between the short and the long term. Okay, what we're looking for is the market. Now, in this case, the overall trend has been up. So we're looking for maybe a brief deviation from that, and then the speed lines come back up and they get their little railroad crossing going. And we're going to show a lot of examples, so we'll go more into that. But we definitely don't want to be using that in this environment right here. If you're doing it right here, you're not really taking a speed line trade because you've lost your momentum and your trend at that point until such time as it resumes the trend again. So good question, Greg. Okay, let me go ahead and work on getting the slides back up. As you saw, I got lots of slides. And again, this is done a little bit differently than I normally do, and I'm trying a different learning technique here where we get the, rather than just showing, one or two, especially to you guys here in the live trading room, obviously you're all very serious about your trading, so I would assume rather than see one stagnant, even though you're watching me trade, just like yesterday I traded this live, Friday I traded this live, because obviously we had the Labor Day holiday, so we didn't do anything Monday, but so you'll see me doing it live, all in the live trading room here, but at the same time, certainly I would think that you guys would go ahead and get more benefit out of seeing many more examples. And I try to pull up very recent examples from just the last several days so that you guys could go back and look at them even more so. So with that said, let's go ahead and just start out with the very first one here. And what I want to do, different charts here I have up for different reasons. I basically want to inundate you with examples. I think that's really important, and you'll see here, here's how I want you to read this going across. Obviously, all of you that are here, this is my 5-minute, this is the 15-minute, this is the 30-minute, this is the hourly. Once we get to the 15-minute charts, I'm going to hide the 5-minute chart, as you'll see, so that you're focusing on the 15, 30, and hourly and daily. Once we get to the 30, you'll see that the 5 and 15 are hidden, and so you're able to focus on the 30, the 60, and the daily, okay? And you'll see that as we go along, because I want you guys to, look at the time frames, and for those of you that are looking for the bigger, the bigger hits, I'm just going to tell you right now, really focus on the 30-minute chart when I get to it. But the way you'll notice this here, look at my cursor. The bar in question is then referenced across. So you see this vertical bar? That ties to this 15-minute bar. That ties to this 30-minute bar. That ties to this hourly bar. And then that ties to this daily bar. Okay? So again, I decided that I wanted to have some really recent examples. I know some of you have told me that you have data platforms that don't allow you to go back very far. So I tried to show some things here that then you could go back still, since we're within a couple of days, and re-review. Okay? And then you can always come back tomorrow and ask even more questions. So it works out real slick. So just keep that in mind. Pay attention to where the vertical lines are as we're talking about this. All right? The other thing is, keep in mind, I've intentionally not, because this is the real world of trading, not these hypothetical one or two perfect, picture perfect setups, that then are harder to find in the real world. I wanted to focus on the real world trading here for you guys, and so you're going to see a lot of variations of the technique, but I think between these roughly 50 examples or whatever, it should help condition you then more so. So I'm really trying to reinforce the learning here. So hopefully you guys get a lot of benefit out of that. I thought this, I've been involved with adult, learning theory and education in the past, and just thinking that this might be the best way to do it. So we'll see here. So keep that in mind. Now, on this first slide, this is again, these are all 5-minute charts until I tell you differently here in a little while. Okay, yes, and Weiling is asking here, she says that the second bar here is closing below the 50% level, okay? Notice, Weiling, that's a difference between like the Hoffman 2-bar, 3-bar setup and the speed line trade. Okay, the speed line trade does not require that both bars are above the 50% level. In fact, Wiley, if you recall back just a little bit ago when I said no trade rules, did you see anything on there about the 50% level? There wasn't. Okay, there's a reason for that, and the reason is that the 50% level is not a requirement, because in many cases here, I will be looking at taking this trade regardless of whether it's below the 50% level or not, all right? And so 50%, unlike the Hoffman 2-bar and 3-bar setup, the speed line is not conditional upon all bars being above or below 50% level. So very good question. All right, Now, what I wanted to show with this, and I'm going to be showing different things on different slides. As I was going back, I did not organize these by all one concept. No, you're very welcome, Weiling. I did not organize these by one concept. I'm immersing you. It's like learning a new language. I'm immersing you in the different things that you need to be aware of. And again, the beauty is, after today, and after this webinar, you're going to go ahead then and even more so than have the benefit of being here in the room and continue to learn from this. But I fear these 50 examples will really start the ball rolling. Okay. So the first thing I want to go ahead and point out with this, and one thing I liked about this, notice that the histogram on the MACD started turning back up. Okay. Notice that the RSI is above 50, and in this case the RSI was nicely above 50 on all time frames. The hourly chart, 30-minute chart, 15-minute chart, all were in solid uptrends. Okay, now this was 2:30ish in the afternoon. Okay, and I wanted to, and of course that's 2:30 Central Time, 3:30 Eastern Time. As you know, I go ahead and I'm much more skittish about taking those trades at the end of the day. But there's some of you who that last half hour of the day, well, for there's a couple of you that can only be here at the end of the day, and then there's other people that can't be here at the end of the day. So for those of you that can only be here, closer to the end of the day based on work schedules and that, it is a trade opportunity that you can consider. But keep in mind, my caveat about these end-of-day trades is that when institutionals come to play and there's huge net redemptions and distributions and accumulations, back and forth, that a technical trade can go ahead and be shot out of the water. So while this is a nice setup and something that I would be far more interested in before 3:30 Eastern Time, I personally know the risks of what can happen with wide range bars at the end of the day. And hopefully all of you that have been here for any length of time know that there's a lot of volatility. And so while at the end of the day, you notice I like taking my thrust, pullback, thrust trades because those are volatility based. Okay, but the speed line trend continuation type trade is a trend trade. It's a technical trade, okay, and consequently that last half an hour, things can go ahead and dramatically, violently shift back and forth. Okay, so I want to go ahead and illustrate and highlight that point. Nonetheless, what I do like with this, though, and so this is good for you to go ahead and see from a learning experience, is how you see we had the rising trends. Remember what I said there? We got the rising 20-period moving averages. In this case, we had them across all time frames, which is even nicer. But what we're looking for is then the speed line continuation. Now, do you guys remember yesterday I showed you when we were looking for the trade, I said, okay, gang, here's what I'm looking for. I'm looking for it to go ahead and go up, pull back, and push up. Do you remember that? Because we'd had a push, and I'm looking to see if anybody recalls that. If you don't, maybe you ought to go back and watch yesterday's video. Okay, Jerry and Alan do. Well, good. At least I got a handful of people there if they recall that. So if you don't recall it, you're missing out on some really good learning. So what we have here is the speed lines pushing in the direction. They had a counter trend pullback and then resumed the direction of the 20 period, which also jived with the 15, 30, and 60 minute. Okay? So that's something I'm looking for. So when I talked about in my presentation earlier about the speed lines, resuming the trend in the direction of the 20, this is the kind of thing that I'm talking about. Okay. Now, again, we can go ahead and see here the RSIs. We're all very positive. The hourly chart had been pushing very well with the MACD for quite some time. And we had a momentum pullback on the 30-minute chart. as we're going into the end of the day. That's kind of alarming. Don't like to go ahead and see that, especially in light of this is kind of a lot of different things I'm putting back together for you, but I'm trying to pull pieces of all the things you guys have learned over the last couple of months into this as well, because these things build upon themselves. There's going to be future things that I'm going to show you that are going to build upon all the things that I'm sharing, just like this here. So trying to recap some things and put it in perspective. So here we have the weekly pivot right up at my resistance level. Momentum is shifting. So what I'm looking at when I see this kind of thing is, yep, overall it looks like a good trade. For me, the last half hour of the day, this would probably be a no-go. But let's go with this, assuming that this was more in the middle of the day. Then I'm looking at this and saying I might want to be looking to exit a trade like this, and I'm just giving you my real-world opinion on these trades, so you can get a feel for where my head's at on some of these things. I'm going to want to exit a majority of this trade. In this area right here where I know I've got multiple resistance levels, and then move my stop up and maybe try to let a little bit run to see if it's going to get more push through. Okay, especially if it's been coiling for a while, I'll be more apt to look for the push through. So we have a couple different things in play here, though. The swoop is very important. Okay. And I guess the retrending, if you will, because that's what I'm looking for. I'm looking for the trend continuation. So I had a trend, had a pullback within the trend, and then it has a trend continuation. Okay, that's why you sometimes hear me call the speed lines trend continuation trade, because my favorite trade out of this is going ahead and having it push in a direction, pull back, and resume. And I talked about that actually yesterday, so I'm glad to see that Tom and Ian and Chris and Stu and Rick, Antonio and Alan and Jerry all remember that, because that ties in, and now you can kind of see why I was looking for that. All right? So this is one example, and again, of course, we had, as you guys know, on this daily chart here, bullishness as well. So I'm looking at multiple time frame analysis here as part of this process. The more things you have on board across the different time frames, the more confidence. So you see, even at the end of the day here, in the last half hour of the day, where things get very violent and whippy, not until basically after the cash market closed, were they able to go ahead and tear it back down. But while the cash market was open in the last half hour, they couldn't break that trend. So let's go ahead and get to our next example. Okay, and by the way, if anybody has any questions, feel free to go ahead and ask those as we go along, or write them down, and I can cover it later, just timing-wise, whatever fits best for you there. So here's the next example, and the first thing is that you'll notice here that, again, these are all meant to be 5-minute examples, but I want to show you the various charts in play. Then you see these were, as I'm pushing through the different examples, you'll see us go back just from the last several days, so you should all be able to go back and find these on your charts. Not that there's not, most of the learning should be right off of these charts here. You can see what it looked like live, but if you want to go back and look at your charts, because you use, let's say, a black screen or different colors on your thing, so you just want to get an idea mentally of what that image looks like in your brain, you can do so. That's why I tried to pull up recent examples. All right, so what we have here is, can anybody tell me real quick? I just want to see if people are already starting to pick up on this. What's one of the first things that sticks out to you about the 5-minute chart? See, I'll pull this up here. So I got a lot of people in the room there. Let's see if the webinar. Okay. All right. Well, I appreciate all of you guys that took the time to answer here. There's the perfect answer right there. David, Yap, and Gary have the perfect answer, and many of you had other very good answers. So let's go ahead and look at that together right now, because that was exactly what I was looking for. The trend was basically up, wasn't it? Okay. We went ahead, we had a push down on the speed lines, and then a push back in the direction of the 5-minute 20-period moving average, right? We had come down from the we look at the 5-minute chart. I'm going to push the I appreciate all you guys going and answering. Thank you. So nice work. I want to make sure you guys are getting this, because this is important stuff, because as a group we're going to be looking at this stuff, and obviously there's a lot of money to be made with these trades. You guys saw some of the potential just in the last couple of days. Even with low volume contracts, there's money to be made here. So I'm telling you, you guys want to listen to me on these things and hear what I'm teaching. The first thing is absolutely the trend resumed. Okay, so at a macro level, we had the 5-minute chart, the 15-minute chart, the 30, and the daily. Remember the vertical line, so you can kind of see what bar was in play on the bar that I'm highlighting. Okay, they were all above the 50 on the RSI, and as you can see here, look at those MACDs. Now, I think Tim's having a problem talking in the chat room today. He's in here, but he's having a problem. He's answering me on the webinar today. So, Tim, I'll just keep checking there for your answers, Tim B. So Tim also pointed out the MACDs. Absolutely correct. Look at that MACD. Look at the RSIs.